The company did raise its full-year profit guidance. Now, Jim Lebenthal, you're the man, Jimmy GM. What are we supposed to make of this big slide in these shares today?
Well, I think this is simply about the chip shortage, and I'll get into the details in a second. But the big question is, what multiple is GM supposed to trade at? Right now, it's at 7.5 times this year's earnings. 3 years ago, it traded at 6 times. If you believe this is the GM of 3 years ago, then it's overvalued. I say it should be at 10 times for reasons that I'll go into in a moment, in which case this is a $70 stock. But the chips are what's weighing on this. They crushed the revenue estimate, which indicates that they're selling cars hand over fist, but their margins were terrible, and that's because of the chips. That chip issue is going to continue for a while, but underneath this, they've got great demand. You see where inventories are. I mean, heck, if anybody drives past a dealership, you see where inventories are. There's demand for new cars. They just can't produce them because of the chips. So eventually that works its way out, and you've got a stock that is net cash positive as far as the balance sheet goes on the operations side. Eventually, they're going to start buying back shares, reinstate the dividend. But this is where a long-term investor says, what is the multiple? A short-term investor may say, hey, this is terrible, I want out. A long-term investor says they're going to be buying back shares, the multiple's going to 10, a dividend will be reinstated, I am in.
Okay, Steve Weiss, I'm going to paraphrase Jim now, no big whoop. Because that's what he's saying. None of this matters because the chip shortage and all that's going to eventually get figured out. The stock's going at least to $70. It deserves a higher valuation. What do you think?
You know, I love what Jim said, because if GM should get a 10 multiple, that means Volkswagen should get a 20 multiple. The reason being, they put more money into EV. They did it sooner. They'll be the largest EV seller in the world. And their other cars, and go through them, Bentley, Porsche, which is outselling Race, and by the way, which is selling at 40 times earnings. So, Jim, I hope you get it. I got a small position there where I followed you in, sold most of it. I hope I get back to even, because I got in later than you. But, man, I'm going to coin it on Volkswagen and Porsche. If you're
but
right.
you're still in it, though.
I
mean,
hope
that's
you
the
are
key.
this time.
That's the key. This is like the old Apple days. Hate on it, but own it, right? I mean, you don't have to own it.
Yeah, I mean,
I knew I would leave you speechless with that one.
You leave me speechless because I would have thought you've listened more carefully to what I said, Scott.
No. You dump all over the thing and you say how Volkswagen is a much better play, Porsche, etc. But then, oh, by the way, I own a small position.
Yeah, well, I do own. I'd say my position is about 20 times the size in Volkswagen and Porsche. It's one of my largest positions. I spoke to the company yesterday. Things are going great there. GM, I mean, it's a tag end just so I can rag on Jim a little bit. And guess what? That part's working out. So I think I'm a winner, even though I'm losing money.
You know,
bang,
knowing
Scott.
you, I swear, knowing you the way I do, I would believe that. I believe that you are literally only in the stock so that you can give Jim the you-know-what on this program. Joe, however, might have a different reason as to why he is in General Motors. Joe?
Well, Jimmy, I almost called you this morning because I wanted to know whether it was time to get out of GM and maybe put my money in CarMax or something. But I figured let's do this on air to help the viewers. Here's the problem. Jim, you're in GM in the low 30s. I'm in GM in the upper 50s. The question becomes for someone like myself or someone that followed you in or followed myself in at these high levels, right? I don't know when the semi shortage is going to resolve itself. I don't know how much longer GM's going to benefit from the high prices that consumers are willing to pay. There's now challenges as it relates to battery fires with the Volt. Jimmy, the stock's about to break the 200-day moving average. It hasn't done that since September. You know a lot of quantitative funds are going to be getting out there. Why do I stay in here? Why do I not get out, put my money elsewhere, and come back at a later date?
So, Joe, this is the classic discussion from earlier in the show of are you a trader or are you an investor? You heard me say I think you're a very good trader. I can't tell you this is a tradable stock right now. I can tell you at this price, it is a great buy. It is a great value. Now, will it break that 200-day moving average? Will the quants do something to it? Maybe, maybe not. But what I don't want to do, what I don't personally want to do is get out of a stock that is now fundamentally way under its intrinsic value because of something that may be temporary. What the quants may do, and then I risk being out of it when it runs. This, I'm very sure, not positive, but very sure will be a $70 stock. I'm not going to goof around here in the low 50s, but if you're a trader, I will tell you I don't see what the immediate catalyst is this week or next week that will break it out. You've just got to be patient, which is one of my virtues. I've got other virtues that I don't have, but, you know, that's my virtue. I'm patient and I'm disciplined and I can stay in this for the long haul.
All right, you